Good afternoon. I'm Vidhi Vivek. I work as the research associate at IISc. And on behalf of the entire team, it's an honor to be in a room with leading voices in the climate journey of India. For those of you that are familiar with Market Pulse, which is released by IISc as a consolidated record of equity impact investment deals, you must have noticed how often we note climate to be the leading sector in terms of monthly equity flow. With an acknowledgement from the government, the industry, and the consumers on the relevance of climate positivity, the avenue and opportunities for sustainable products and services have scaled up, so much so that research studies show India's funding requirements towards climate transitions are pegged at a cumulative $10.1 trillion. With this fascinating backdrop, I now invite on stage our esteemed keynote speaker, Mr. Prem Prabhakar. Mr. Prabhakar is the MD and CEO of SBI Ventures Limited. He has over 24 years of extensive experience in the banking sector. His expertise lies in treasury operations, where he has more than 12 years of experience covering forex, money markets, derivatives, ALM, and risk management. Prior to this appointment as MD and CEO, Mr. Prabhakar was chief dealer at forex at SBI Global Markets and chief dealer at SBI New York. Additionally, he also served as a director on the board of Jharkhand's Rajya Grameen Bank. It's a pleasure to have you here, sir. The floor is all yours.
Good afternoon, everyone. So, first session after lunch, post-lunch, and little bit difficult. There's something called occupancy ratio. Yesterday, when I was checking in the hotel, the guy was telling me it is 102%, sir. People were waiting. Sir, 5 minutes, 10 minutes, we'll give you room. So he was also surprised. I was also surprised, Grand having 102% occupancy. Then I realized there are a couple of conferences going on here. So thank you for having me. Good afternoon once again. It's my pleasure and honor to represent SBI Ventures here at Prabhav 2024. I would like to congratulate Impact Investor Council for leading the industry dialogue to access to private capital for key sectors with specific focus on climate financing. Their compelling research and policy advocacy through representation to the Government of India have enabled the creation of a robust impact investing ecosystem. The discourse on climate change and the impact it has on our lives has become a topic of daily news, unlike it was a few years earlier. It was a kind of talk between the scientists and all. Climate change is one of the most pressing issues of our time, and India is at the forefront of this global challenge with per capita CO2 emission of roughly 2 tons, while India has one of the lowest per capita in G20 countries. But overall, if you look at the volume, the quantum, it is third largest emitter. So India has a critical role to play in reducing emission and mitigating the impacts of climate change. It is estimated that climate change is likely to impact 600 million people across India if the growth in emission is not contained. Investing in climate action is not only a moral imperative, but also an economic opportunity. To combat climate change, India has committed to a 33 to 35% reduction in emission intensity by 2030 compared to 2005 in the Paris Agreement. The International Energy Agency estimates that India requires $1.4 trillion in climate investment by 2040 to meet its NDCs under the Paris Agreement. This represents a significant opportunity for investors, entrepreneurs, and policymakers to drive growth, create jobs, and build a sustainable future. India has received financing for its climate initiative from bilateral investors and multilateral development banks, international climate funds. The Indian government has also formulated policies in renewable energy, agriculture, waste and water management sectors, and all these sectors to address the climate change. For example, in 2015, the Indian government launched the International Solar Alliance, which aims to mobilize $1 trillion in solar investment by 2030. Since then, India has become one of the world's leading markets for renewable energy, with solar and wind power capacity growing by over 20% annually. However, as per a report by the Climate Policy Initiative, India needs to increase its climate investment by 11 times to meet its NDCs. The report also notes that while public sector investment in climate action has increased, but most importantly, private sector investments are very limited, accounting for just 10% of total climate investment, whatever is required. So what are the opportunities for climate investment in India? Firstly, renewable energy continues to be a major driver for growth, with solar and wind power expected to account for 50% of India's power generation capacity by 2030. Energy efficiency, green infrastructure, and sustainable transportation are also critical areas of investment. Additionally, climate resilience and adaptation are becoming increasingly important, particularly in the context of extreme weather events such as cyclone, droughts, and floods. Investing in climate-resilient infrastructure, agriculture, and water management can help protect vulnerable communities and ensure sustainable development. At SBI Ventures, we enjoy the parentage of State Bank of India and its decades of deep engagement with SMEs in India. This has helped us take initiative to provide much-needed capital, support, and deep sectoral knowledge to enterprises in order to scale climate solutions. SBI has recently brought SBL under its direct control, so we have become a direct subsidiary. This highlights the focus and importance it places on the equity approach alongside the traditional nation-building efforts. Today, we manage AUM of 33,500 crore under the NEEV funds. You all are aware we have NEEV 1 and NEEV 2. Apart from that, you have UK IDCF, SWAMI Fund, TDC Fund, and SRI Fund, which is working for the MSME sectors. Our NEEV funds initiative is focused on making equity investments in climate-focused early and growth stage small and medium enterprises that typically face the highest difficulty in accessing the capital. We believe SMEs are the most appropriate vehicle to channel this capital as they provide the maximum leverage for climate action. Sectors such as waste management, water supply and sanitation, clean technology, energy efficiency, renewable energy, sustainable agriculture, and urban mobility contribute towards mitigating the impact of climate change and promote clean environment, along with creating green jobs, poverty alleviation, livelihood generation, and social inclusion. We are uniquely positioned to become the gateway for securing finance for climate-focused enterprises in India. Equity Financing Initiative, it initiates a virtuous cycle of capital availability, especially at the SME levels, as it allows the companies the ability to lever up and grow, expand further. The investments by funds managed by SBI Ventures, such as NEEV 1 and NEEV 2, in such businesses will therefore create a catalytic multiplier effect for the companies to raise subsequent capital for growth. As the science is clear on the threat of climate change, so too is the economic case for governments across the globe to use economic and financial levers to support the transition of our economies and ensure it to positive growth, job, competitiveness, and fairness. India's climate ambitions present opportunities for innovation and entrepreneurship, and it is our collective responsibility to carefully nurture the ecosystem to aid in driving growth, impact, and building a climate-resilient future for generations to come. With this, I would like to conclude and wish everyone the best to help in driving the change we need. Thank you so much.
Thank you, Mr. Prabhakar, for that detailed overview of India's energy sector and SBI Ventures' efforts towards the same. Moving on, I'd now like to invite on stage Mr. Vivek Sen, India Director at Climate Policy Initiative, for his opening remarks on importance of thematic finance in India's climate transition. Over to you, Vivek.
Thank you so much, and it's a real honor and a pleasure. I really congratulate the organizers for being able to put such brilliant minds into one room. Of course, many of us are networking outside, but still there is a lot of people inside. So this is a great opportunity to discuss climate finance as such. We have heard numbers before. There are various estimates ranging from $8 to $12 trillion requirements And when we move towards what is the actual flow of finance, then we see there is a massive gap. In 2019-2020, we recorded an annual flow of only around $44 billion, which is insignificant as compared to the requirements of finance. If you bring the 8 trillion to 12 trillion numbers on an annual basis, then our annual requirements would be in the range of $200 to $300 billion per year. So we see there is a massive gap, and this gap needs to be filled. How can thematic finance actually help? There are specific needs for specific sectors and specific technologies. Thematic finance can help drive finance into such sectors, into such areas, and into such technologies. It can help innovate solutions, products. It can help ecosystem development by helping the new age startups to test out the technologies that may be needed for the future. It can help develop an ecosystem where all of us are collaborating and sharing knowledge. So thematic finance is very essential, very critical, and I think you will have a chance to